As Bitcoin's price has consolidated, we have seen growth in the number of whales that have been purchasing up BTC. The question becomes, who are they buying it from, and what does this mean for the price action of Bitcoin?
Hi, and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at some of the bigger macro pictures, what's going on with the price action, what's going on with the on-chain data, where we see, whales buying, selling, retail buying and selling, and what that might mean for the future price action of BTC. As I get into the video, if you find it useful, informative, smash a like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe? And if you haven't yet joined us in Discord, guys, check it out. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. Let's jump right down into this video. We've got a lot to cover and not enough time, so we'll try to keep this nice and brief and to the point, while still giving you all the information that you need. So what we're going to do is we're going to start things off by taking a look at the on-chain data. I think this is a good place to kind of start because there's a lot going on there. That probably just needs to be unpacked a little bit. Okay, so what we'll do is we'll start here. Okay, so up here we can see that we've got 3.9571 million Bitcoin going onto the exchanges, and we have 3.9340 million coming off the exchanges since the 1st of January 2023 through to yesterday, which was the 26th of May. Okay, this means that there's 23,000 more Bitcoin gone onto the exchanges. This has been dramatically changing over the last week or so. Okay, so this was actually a significantly higher most recently, and it has started to cool off. Basically, we're seeing a lot more Bitcoin getting withdrawn from the exchanges. This is no surprise because we do see, of course, that price action, and we do see price slipping down. That means that Bitcoin is available for purchase at cheaper rates, and therefore there are pockets of people buying up Bitcoin at a slightly cheaper rate. Okay, so it's not too surprising. Now, as we can take a look at this, we can see that we are still sitting higher on exchanges with the amount of Bitcoin than we've had at the end of 2022. Okay. And that would typically be bearish, but we obviously have plateaued here and we started to pull back down a bit. Okay, this is also visible from our 30-day average difference. Okay, each bar here is a 30-day average period of how much Bitcoin has been withdrawn as a net difference change or put on as a net difference change. And we can start to see that we're seeing it below the midline, and this is a bullish indication. Okay, so looking pretty positive from that point of view. Then we take a look at the inflows and the outflows from a line graph point of view. We can also drill down a little bit deeper. This is obviously 2023, as I said, from the 1st of January 2023 through to the 26th of May 2023. We can take a look at this for the 2019 period. What I'll do is I'm just going to make sure I get the right time frame. We are a couple days out here, so I'm just going to add that to the 26th and apply that in. And then you can see here that in 2019, we had 7.2860 million going onto the exchanges and 7.3123 million coming off the exchanges. Again, more flowing away from the exchanges than is going on as a total difference between those two things. But it's also worth noting that between those inflows and those outflows, where we have quite significant numbers versus where we are right now. We have 3.95 million versus what was in 2019, 7.28 million. So we know that it's significantly different in terms of the amount of Bitcoin that's moving around chain now than what we had previously. And this doesn't give me a lot of confidence. That being said, we are seeing some signs finally that things might be on the turn. So when we take a look at 2015, we can see here, and again, I'm going to adjust this for the correct time period. It's going to be the 1st of January 2015 through to the 26th of May 2015. And in here, you can see it's 4.9 to 4.8. And so we still see that even in 2015, when prices were significantly lower than they are now, volume was higher than it is now as well. So we should see growth in terms of the amount of Bitcoin that was actually moving around between the 2015 time period and 2019 time period. And then in 2023, we see a complete drop-off, right? We see very insignificant volumes going and being pushed between the exchanges, right? Now, this can be for a couple of different reasons, right? We can see that there's a lack of interest from institutional investors, for example. We've seen them selling off for quite some time, and we'll talk more about that in a moment as we're starting to see them buy up a little bit. But we're not seeing the volume that we would normally expect to see, and we've seen growth on year on year in terms of 2015 to 2019, and now we've dropped down lower than we were in 2015. This is nothing to do with pricing either. With significant price differences, sure, but pricing doesn't generally mean that you're going to see less Bitcoin moving around. There's 19 million Bitcoin, for example, right? So we'd expect to see a large chunk of that moving around. And over a longer period of time, that circulating supply is increased, right? So we saw 2015, it had less circulating supply than 2019. And yet in 2019, we see a significant growth in the amount of Bitcoin that's moving around. Now, fast forward to 2023, we have more circulating supply than we had in 2019. And yet the volumes have dropped right back as well. So there's more Bitcoin out there, but it's just not moving around, and it's not moving. And that could be bullish, it could be bearish, right? It's not a huge indication, but it's an interesting thing to know. We do not have the kind of ideas where we see that, you know, there's a huge amount of activity and demand around Bitcoin. We don't see that. We see inactivity and we see less demand for Bitcoin. And so therefore these volumes are lower. That's my take on it, which would steer me more towards the bearish take on the market. Now, when we talk about whale wallets, they have been actually accumulating recently, and it is of great interest to me to see this, because this is something that we've been talking about for quite some time, and I really wanted to see whale investors actually jumping into BTC and starting to actually accumulate. Okay, now this comes on the back of some people selling. Okay, you can't just have wallet counts increasing without other wallet counts decreasing, or the amount of Bitcoin in wallets decreasing, right? Everything has to balance out. There's 19 million Bitcoin, and so therefore everything should be balancing out, right? There's no synthetic Bitcoin in this analysis, for example. So here we can see that we have a sharp increase with the number of wallets that have over 1,000 Bitcoin now. And this is a pretty big tell. We can see this, though, is on the back of our Krakens, which are decreasing in size. So we know that the larger investors, the 10,000 Bitcoin wallets, they're on the decrease. And I think that is spurring on some sharks that go up a bracket up into that 1,000 BTC level. Okay, because one thing we need to understand about this type of analysis here is that when the Kraken wallet goes down, this 10,000 Bitcoin wallet size, it does not mean that we're going to see an automatic increase here, as in they've just dropped down lower than 10,000, so we see a spike with the 1,000. That is not what this analysis is doing. This analysis is inclusive, not exclusive. And what I mean by that is that this is over 1,000 BTC per wallet, which means all the counts from our 10,000 wallets are already included inclusively inside our wallet counts for our whales. This means that when these ones go down, we don't automatically see a spike up here. Instead, these ones have to come down significantly lower than 1,000 Bitcoin in order to bring this wallet count down as well. So this spike to the upside on our whales is actually independent of that of the Kraken sized wallet, which is an interesting thing to note. It means that we've got some larger investors that have over 10,000 Bitcoin coming down to having less than 10,000 Bitcoin, but they might still be having at least 1,000 Bitcoin, and therefore they're still included here. Only this will only go down if these 10,000 wallets, for example, or these 10,000 Bitcoin based wallets were to drop down lower than 1,000, in which case then you would see a decline in our whale. So we're seeing growth, and growth is good. So this means that there are some interest within the multimillionaires and the billionaires. There's some interest in BTC, and there's starting to be some kind of accumulation. Now, this accumulation seems to happen as we start to see a bit of a pull down in the market, which is not a coincidence. It's how they grab liquidity, and they can buy into fear and they can sell into greed. Okay, essentially they sell into the pumps and they buy into the dumps. And we've recently seen the price moving down, and we're starting to see some accumulation. The questions here really become, are these whales going to continue to accumulate, or is it actually going to kind of change, and are they going to dump on the market once again? Okay, so these are the unanswered questions and things that we're going to have to kind of look at the charts and understand the structure of the market before we get a good understanding as to kind of what is likely to go on here. They could be starting their DCA journey at this point, or they could be just taking liquidity and looking to dump the market further later. And what we mean by this is, if we take a look at the 365-day view of the Bitcoin whales, then it gives us an idea that things are only just starting to heat up here. Nothing major has actually occurred. It looks great on that 90-day view, but if we zoom out of the graph, we can see that actually there's a limited amount of accumulation that's occurred here. Nothing terribly too unusual. We've seen these kind of things before. Nonetheless, though, it is positive, and we're going to take that as a bit of a win. So we do want to see these guys accumulating, but it will be coming on the backs of others. So we're going to be keeping a close eye on this. Is this the beginning of a downward movement in price that sees maybe Bitcoin come down towards the 20K area, that sees further shakeout of other other Bitcoin current holders to basically see the transfer of wealth between, let's say, retail and institutions, or smart money as it would often be called. Now, when we take a look at our kind of retail sized wallets, you can see that they are starting to slow down a bit as the price is starting to pull back down. And, we've seen a great accumulation from these guys, during February, during June and August and November, right? They've been buying up every single, dump to the downside. At some point, though, I do suspect that we're going to have to see a bit of a shakeout when it comes to retail investors, as we had done previously. This will be for many reasons, not necessarily fear, but will probably come down to necessity, right? A lot of people have unrealistic time horizons when it comes to how long and how quick they think bull markets will last. And as such, they think quick money. They think I can throw some money in here and I can withdraw it, within, a few months or whatever, and double, triple, quadruple my money or whatever. And unfortunately, sometimes it takes years to play out, right? So if you're getting in towards the bottom of a market, then it's going to take you a very long time before you're going to see those significant gains, specifically with something like BTC that, in my opinion, has very limited growth potential over a longer time period, or at least on a shorter time period, I should say, but great potential over a longer term period. And this is because there is diminishing gains. You eventually reach plateau, right? You think of it as an elasticity curve and supply and demand. Eventually, it kind of reaches to a point where the price can't possibly push terribly too much further, not without some outside factors such as the currencies that you're trading with being unstable. Let's talk about hyperinflation, for example. So there is limited and diminishing gains, bull run on bull run on bull run, for example. We can see this within the charts. It's very obvious that you see this within the charts as well, right? We have diminishing gains over a short period of time. That means that essentially we can still see growth, and growth will still continue, but it won't be giving you those kind of $1 million that you may be thinking that you're going to get from one BTC anytime soon. Don't get me wrong, I do think that we'll see a $1 million BTC in the future. I just don't think it's going to happen for another 10, 20 years or so. I'd love to be wrong on that, of course. That's kind of how I see things at the moment. Now, with all this being said, and we can see that there's a need for retail to kind of be shaken out of the space. If we take a look at our kind of shorter term view here for our retail wallets, we can see that they are still kind of, slowly kind of working their way up. We have well over 1 million people now, or 1 million wallets that have over 1 BTC in them. And that was a milestone that we were looking to achieve. With that being achieved, I still think that we're likely to see a 30% drop in the retail side. So I'm still thinking that this is probably going to have to come down towards 700,000 wallets at some point. Again, I would love to be wrong on that, but in order for everything to balance out and for smart money to come into this market, someone has to be selling their Bitcoin to them. And typically that comes from retail investors. And I do think the retail investors are going to have to, out of necessity, sell their Bitcoin, whether this is going to become the fact that they need to pay their mortgage or they're going to have to put food on the table, whatever it may be. I think at some point that, retail investors are likely to kind of succumb to the selling pressure, and we'll see a move to the downside on BTC, which will mean accumulation at that larger institutional level. Now, there could be many different factors for this. We can take a look at, the US government selling their BTC all the way through to black swan events, such as like FTX or whatever, right? There's lots of different things that can unfold. One of the things that we understand from the understanding of the on-chain data here is that the volume of Bitcoin moving around is significantly low. It's lower than it has been for quite some time, right? With 2015, we're lower than that level, right? Which is a pretty big deal. It's not something that we can kind of take lightly. It means that there's not really sufficient demand for BTC, both on the selling side or the buying side. So as I said, it's not an indication that we are basically bullish or bearish. It's not saying that we are massively swinging in one particular direction. It's just an indication that actually, we haven't really got the environment at the moment for increase in the demand elements. And that's why we see suppression within our inflows and our outflows. There's fewer Bitcoin moving around because there's just less interest at the moment in BTC. This is also visible when you take a look at social media, and you can see that this search history on things like Bitcoin analysis, for example, within the YouTube ecosystem is obviously, also diminished quite a bit. You can see the volumes are just generally typically down. And this means that there's less interest. You can check this out on Google Trends as well. So when we see that and we compound this with how much Bitcoin is actually moving around, it makes sense that there's insufficient kind of interest in Bitcoin at the moment. Now, like I said, it's not bullish or bearish because it doesn't necessarily swing the market in any one direction when we're reasonably balanced like this. But there are going to be pockets of liquidity that unfortunately smart money is going to want to take advantage of. So on that note, let's jump down into our charts, right? So we have a good understanding now that we've got some interesting things occurring finally when it comes to institutional smart money, right? We can see that the Kraken size wallet is basically lowering their holdings, maybe transferring that over to those whale wallets, which is why you see that accumulation occurring there. And we also see retailers not really participating. They're kind of still trying to buy, but essentially they're kind of reaching that limit, in my opinion. This is also compounded when we take a look at credit card debt on the rise, and we see savings accounts on the down low. Okay, so we see that basically people's savings accounts are diminishing, and they're pretty much paycheck to paycheck. I think that's coming real soon, to be fair. And then we see all the credit card debts reaching really incredibly high levels. These things, with retail investors holding cryptocurrency, could be another reason that you see many retailers selling off their crypto. But from the price action, we can see that there are going to be some interesting points for price action. So here we have smart money concepts. Smart money concepts essentially tracks that smart money. And in here, we can see that we have these green areas. These are fair value gaps. Fair value gaps are created from imbalances in the order books. Basically, in this particular direction where these are green, this is basically buy orders that were unable to be filled at their initial entry point. So for example, down here, okay, we have this this fair value gap, this green one. This basically meant that a buy order came in at about $19,700, okay, and a large buy order, that there was insufficient liquidity to fill that order. So there wasn't enough people selling in this range here. So price moves up to where the liquidity is and to where the sellers are. Okay, so in order for that order to get filled, the price action had to go up to $21,820. Okay, and now that's a pretty big difference, right? If you're trying to buy Bitcoin at 19,700, right down here, for example, actually it's more 20,600, sorry. If you're trying to buy Bitcoin down here at $20,600, but then you're having to pay $21,600, you're not exactly happy about that. So you generally don't want to keep buying. You don't keep buying at the expensive prices, right? But that's what's kind of gone on here. And this tells me that things are not naturally being pushed to the upside. And this is something that we're talking about quite a bit a few months ago. And so we can see here there's another fair value gap. A buy order comes in at 22,100, but yet managed to kind of get filled at around 23,900. And then another one up here at 25,000 got filled out at 26,000. So these fair value gaps, they are basically showing us an imbalance in the order books. They're showing us liquidity issues. There's no liquidity in these ranges at the point when these orders came in. And so you get these kind of fair value gaps. Now, price action typically likes to come back down and fill those fair value gaps out. Okay, and therefore we can see that there's going to be a requirement to maybe push the price action of Bitcoin to the downside at some point. Now, it doesn't have to happen right away. You can in fact have a bull run and come down later. That happened in 2021, where we left a gap behind at 20K that we only recently filled in 2022, right? So we know that it can take a long time before you fill those gaps, and you can have all-time highs in between. So it's not a given that you move down here, but it's important that we understand that these imbalances that are stacked up like this is quite unnatural, and to me just makes me worry that actually all this was manipulation through DXY and Forex traders inadvertently kind of creating pushes in other assets that are paired up with USD as USD actually was being traded off against other Forexes or other currencies, I should say, in the Forex market, and therefore we can see that maybe this was all accidental, but at the same time it's unlikely to be the case, and it is more deliberate in the way that this is pushed up to grab liquidity, because essentially during this time period there was a lot of selling occurring. Okay, so in order for retail to buy, someone has to be selling them their Bitcoin. So everything that we're seeing at the moment is quite interesting here on the smart money concept side of things. Now, the other thing that we note here is we're on the higher highs and the higher lows, and these do have a tendency to want to break down. Okay, so it's not a guarantee that they have a breakdown, but this is a pretty worrying time for us. Seeing this kind of growth here, we can see a necessity to at least test that lower trend, which would be more in line with our 200 daily EMA. But I do think we have to kind of move down a little bit deeper. That 200 EMA, by the way, guys, is 25,000, and I personally think we have to be testing more around the 23,900 as per the morning video on those micro structures. So ultimately on the daily chart here, it does look like there's going to have to be a need to break down. We're still looking for less than 20k. So all in all, it does look like that's the direction that that's going in. Now, from our Elliott Wave theory side of things, the ideal would be to land in this yellow box. This yellow box area is a Z wave, and would put us between $12,525, which is a new lower low, or slightly higher, and it would be fine, 19,700. Okay, so Elliott Wave theory says it could be anywhere in there. It doesn't have to be a new lower low, although we did see a lot of whales selling at the November low, so suspect that there's potential for a new lower low around that kind of $12,000 range. Now, here we do have a potential bullish setup, at least temporarily, here on this one. We can see here that we do have that idea that we're in this kind of higher highs and higher lows, but internally within here, we do see a couple of bullish potential setups. Okay, so it's not all bearish news. And so we saw one in here, for example, we had this move to the downside, and we find ourselves in a very similar kind of setup right in here as well. So it's possible that we do push up and even higher before we get our break to the downside. And that's something that we need to kind of acknowledge here, is that we do have this potential. And I think this is likely to occur when we get down to more towards that $23,900 level, more specifically $23,937, which is this 1.618 target range. If we were to hit that, I think we'll move up to 29K is kind of a bit of a given. I think that would be a nice kind of area to find the upper resistance, and then we can talk about moving down from there. One of the things that's not yet clear is whether or not we have to break up higher than the local high at the moment at 31,000 USDT. I don't think that's necessarily something that's going to happen, but it's something that we need to be considering nonetheless. Now, from our supply zones and demand zones, we did get rejected here, and this is pretty standard stuff, between the 28,881 and 31,848. Nothing terribly too unusual there on the weekly here. The weekly chart has corrected quite nicely down towards the oversold. That's okay, but we can spend a couple of months down in the oversold range, so don't read into that thinking that we're going to bounce right up right away. But rejection here, finding support on the 50 EMA at the moment. Losing the 50 EMA, we come down to that weekly 200 EMA around 24K, which would kind of fall in line nicely with our daily 1.618 at $23,937, because we could just wick down lower than the 200 EMA, close above it, and then look for that kind of 29K bounce from there. So everything on Bitcoin seems to be moving along nicely in some regards, like the price action wise. On-chain is, showing us with a lack of interest. So I think ultimately what we're doing here is just farming. I think smart money essentially is farming liquidity and bouncing the price around a bit. I think that's generally what's probably going on, ultimately, because there is a lack of interest overall, lack of volume really being pushed through in comparison to where things were previously, specifically when we start thinking about where the previous bullish market started and why a lot of people thought that 2023 was going to be the start of a bullish market. We saw great price momentum straight out of the gate, but not really the volume to back it in the same way that we saw in 2015 or 2019. We also see that essentially a lot of selling pressure was occurring during the early few months of 2023 from those institutional smart funds, such as the Bitcoin whales with 1,000 BTC or more. They were selling all in November, December. It was really sharks, which had 100 Bitcoin, that were really pushing up, grabbing the liquidity pretty much during December into January, February, March. And so, for the most part, I just think we're seeing a lot of farming going on from retail, or farming of retail by those smart funds. And essentially, I think this will have to move down deeper to find additional liquidity. So for now, it is what it is. We'll keep a close eye on it. We continue to track it, and I'll continue to keep everyone up to date with my thoughts and opinions on where I think Bitcoin is going. But yeah, for now, I think that kind of sums up kind of where I think things are heading on these kind of daily timeframes and weekly timeframes, with some of the on-chain data also kind of giving us a bit of a hint as to what might unfold next. If you found this useful, smash that like button. I appreciate that. If you're new, subscribe. Don't forget to join us down in Discord. And guys, I'll catch you all in the next one.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.